And the federal government yesterday approved the revised version of the 2020 budget and the medium-term expenditure framework for 2020 to 2022 as recommended by the Ministry of Finance, Budget and National Planning. Now, that document comes with new assumptions, including a $25 per barrel oil benchmark, targeted oil production rate of 1.94 million barrels per day, and an exchange rate of 360 naira per dollar. According to the Minister of Finance, Budget and National Planning, Mr. Zainab Ahmed, the revised budget now amounts to 10.5 trillion naira, and that's a difference of about 71.5 billion naira compared to the initial budget approved. Well, joining us to analyze the budget modifications and the MTEF is the head of portfolio management at Commercial Partners, Victor Aluyi. Good morning, Victor. Thanks for joining us. But tell us what you make of the new assumptions. All right, Victor, so tell us what you make of the assumptions in the budget in view of market realities.
I think, what we saw, the approval we got yesterday was an adjustment of the medium-term expenditure framework. And that framework has been in use since 2009. Essentially, it's a rolling annual plan that sort of guides, yearly budgetary expenditure framework. So in terms of the adjustment that we saw yesterday, I think they are quite reasonable and they are pretty much in line with current realities. Remember that, the 2020 budget initially had a benchmark of about $57. That was reviewed to $30. And now we're having a review further downwards to $25 a barrel. And that should go from 2020 to 2022 because it's an adjustment of the MTEF between 2020 and 2022. We also have, production at about 1.9 million barrels a day, where I have a bit of a concern. If you go with the OPEC cuts that we have seen, we should be doing about 1.6, 1.7. So I don't know how truly realistic the 1.9 would be, except, of course, you probably want to add condensates in there. But in terms of the oil benchmark, in terms of the budgetary numbers, they look quite realistic given current realities.
Now, talking about the crude oil market now, it has actually been volatile lately. Will the output cut agreement of OPEC Plus be sufficient for price stability in view of Nigeria's benchmark of $25 per barrel?
Well, I think, the crude oil market dynamics, are pretty much shifted to much of a supply one over the last couple of years. What COVID-19 basically came to do was to create significant demand destruction. So essentially about 10 million barrels has been taken off the market starting from this month. However, the demand destruction is estimated, significantly way above that. What I think is going to happen is that the OPEC curbs would essentially create some sort of balance that will see crude settle in the, low and maybe mid-30s for the better part of this year. So I think that those curbs will continue to provide decent support for crude prices, particularly with respect to where our budget benchmark currently sits right now.
But what happens if prices actually slip below $25 per barrel again, considering a projected second wave of COVID-19 cases expected to hit the globe?
Well, I mean, the truth of the matter is that I think health experts are essentially warning around, the easing of lockdowns and how, global economies should be kind of measured in terms of how they are easing lockdowns so that we do not have a second wave. If you go back to the Spanish flu pandemic we had in 1918, we actually had two waves of that. And that was what, made the whole situation last for about a year. I mean, we cannot totally rule that out. If there's a second wave, the impact will certainly be devastating. And I would expect governments the world over, and particularly Nigeria, to react if that happens. Again, it remains to be seen how that plays out in terms of, a second wave. But if that happens, governments would have to react and adjust.
Victor, the revised budget has an FX rate pegged at 360 naira to the dollar. How sustainable is that through the recent currency pressures?
Well, I think, with regards to currency pressure, the Apex Bank has done a number of things recently to try and adjust to the reality that we have on ground. If you look at the OTC futures, what the CBN has done, what they did earlier on in the year was to create, 47 more contracts that took the entire contract spectrum to about 60. Before now, the OTC FX futures was instituted in 2016 to help, investors, particularly foreign investors, hedge their exposure to Nigeria or to the naira. They had 13 contracts, monthly contracts for 13 months. So basically, for investors that wanted to stay for 1 year, they were nicely hedged. But earlier on in the year, the central bank introduced 47 more contracts, which essentially, stretched that out to about 5 years. So basically, signaling the fact that the Apex Bank is willing to sort of guarantee or help foreign investors hedge going into as long as 5 years. So I think that adjustment that we saw now is still part of the continued effort of the Apex Bank to try and address the currency weakness that we're seeing. Whether that is enough remains to be seen. I think the bank will continue to react as the situation evolves.
Now, the FMDQ exchange FX futures market has always been priced with depreciation to the currency. What do you make of the sudden surge in rates where the naira crossed the 500 naira to the dollar?
Well, I think, that revision is basically, the Apex Bank making certain adjustments to the FX situation. We saw that adjustments from about 305 to about 360 sometime in March, basically in the face of dwindling crude prices, on the back of the whole COVID-19 pandemic. So clearly, the central bank is trying to make these adjustments to ensure that it prices in, reality, in terms of what is going on. However, if you still compare those prices to where the offshore ones are priced, it still suggests that they are still largely, underpriced compared to where the offshore ones are priced. So again, the questions are out there as to whether there'll be a further repricing going forward, as the FX situation evolves. But again, that really remains to be seen.
But how much of a sucker do you think the CBN governor's statement on investments guarantee brings to investors seeking to repatriate their funds or dividends?
No, I think it's important. It brings quite some sucker. It's important to hear from the Apex Bank and the man at the helm of affairs. Those kind of words are usually very reassuring, particularly from the policy standpoint. So yeah, I think it would engender some confidence, and that's why we've seen that repricing that we've seen. And that's why we've seen the adjustment that we've also seen to the currency, basically trying to converge those multiple exchange rates. So, yeah, I think it should engender some confidence. However, the global situation would continue to temper, whatever, the Apex Bank, does.
The CBN has also announced an accretion in the FX reserves of $34 billion. How much of a confidence does that bring to the investment space?
I think where the confidence will really come from is, a sustained confidence will come from recovery in crude prices. If crude prices begin to recover, if the global economy, starts to recover and the whole pandemic starts to kind of blow over, that will bring about sustained confidence. But for now, I think there's confidence in the fact that, the OPEC hubs will provide some near to medium term support for oil prices. And that should probably help accretion in the reserves. However, if you look at the situation we still have back here, you still have quite a lot of unfilled, demand, really, which the CBN is essentially looking to clear up within this month. So, yeah, I think it would engender some confidence.
What about the external borrowings from multilateral financiers now? What impact would that have on the naira in the medium to long term?
Well, I think in the medium term, the impacts would not be really significant. But again, if you stretch it out to the long term, that's where we'll probably begin to feel it because these monies have to be repaid. So you're looking at multilateral loans from the World Bank, the IMF, Islamic Development Bank, Afro-Exim as well. And these are monies that will be funding a significant portion of the deficits for this year and probably for the next 2 years. So yes, the pricing on these sort of loans are typically, fair. But, these are monies that would essentially form a part of the debt burden that we would carry as a country.
Head of Portfolio Management at Commercial Partners, Victor Aluyi, thanks for speaking with us this morning.
Thank you.